Bullish Bear YouTube channel. My name is Saj and today we are covering Fibonacci retracements. This video is going to be the fastest and easiest explanation of Fibonacci retracements when it comes to trading price action. Whether you are day trading SPY or swing trading SPY, I'm going to show you the best way to utilize the Fibonacci retracement tool. Now let's get right into the charts. So the first thing I need you to do is ensure that your Fib settings are identical to mine. So I'm just going to draw a random fib from any point just so that I can show you the settings which I use when utilizing the Fibonacci tool. So the key things here is the only boxes you need ticked are the 0.5, 0.618 and 0.786. The other key thing here is to ensure that your reverse button is not ticked. Please leave that blank, and I'll touch on why that is important later on in the video, and those are the settings that you'll need. If you wish to have the lines extended further right towards your chart, not just where you are drawing them, please ensure this extend lines right is also ticked so that you have those levels present as the day progresses and price action changes. So as you can see over here that I am in replay mode, I'm just going to delete this fib that I have drawn. And what I will do now is I'll play this through, and this is on Friday 20th of October, SPY price action. Right, so at this point we can see that we have a clear trend that has formed in the day, and then we also have a pivot point here. So the first thing you want to do is go and select your Fibonacci tool, and what you want to do is draw it from the candle which started the move. So this will be the first 15-minute candle on Friday 20th of October, and you need to draw it from the top of the wick, and we will need to draw that then down all the way to our pivot point, and that is also the bottom of the wick, so that we can see our pivot is at 426.54 and then the bottom is at 421.91. As you can see as well now, we can see our blue and green fib levels, and the idea is to wait for price action to enter this golden zone here before we take a trade. Now, as I mentioned in the mastermind on Tuesday last week, that the Fibonacci tool isn't the only tool that you will use to determine direction of the market, and it must be used in confluence with other indicators that you use or price action itself. So at this stage I'm going to play it just so that we can see what happens with the price action, whether it enters this zone, and what we would do if it does. Right, so over here we can see that the price action did enter this zone, and along with our levels strategy we can see that it has been met with some resistance. So on this candle here, this green one, we can see that the volume was 2.7 million contracts, and we can see that there is also a big wick up to the 0.618 mark, and it's come straight back down. The next candle here is also 1.68 million contracts. However, we can see that that has declined by a total of 1 million contracts. So to me that tells me that the bulls tried to push this up past this 424.54, and many of them gave up, but they did have one more attempt at it and still couldn't move the price that much, and you can see this by the amount of movement we have in the body of the candle. The next candle we can see is a red one, and that is also 1.6 million contracts. So this is clear signs of rejection, and we are also within this golden zone. Following on from there, we can see that price has then started to move in our direction. So had you taken a trade up here, you would have benefited from this move. Now let's see how far this move can take us down, because typically speaking, when you do get a rejection in this golden zone, you will usually revisit the previous pivot. So in this case was the low here, and we can see that our price action and price has also brought us back to this level. Now if I continue playing throughout the rest of the day, we can see that we actually did end up quite low before the end of the day. So had you taken a trade on this red candle, let's say you took the trade at the close, which was 424.22, by the end of the day you would have been at 421.21. So that would have been a 3-point move there, and 3 points on one contract would have been £300, and on 10 contracts, that's close to £3,000. So that is a bearish example. Now let's move on to a bullish example for the Fibonacci retracement. And at the start of the day, pre-market, you can see that there's no clear trend. So we need to wait and identify 2 pivot points. So here we can see that we have a pivot from this point here in pre-market up at this point. So what I'm going to do here is grab the Fibonacci retracement tool and then use the bottom of this candle and then drag it to this point here, which is also the high of day. As you can see on the right hand side, 429.14 is the high of day. And we can see that over here we've had a push up and then we've had a retracement that's dropped into this golden zone here between the 0.5 and the 0.618 zone. And if I play it on slightly for you, so you could have taken your entry here whilst it was in this zone, or could have waited for this to play out. But if I play it on for you, we can see what happens. And we can see it has come right in this zone here and perfectly just bounced straight away back to the previous high of day. And if I continue on from here, you can see what will happen, which is quite remarkable. And that's the end of the day there from that blue zone here. So what we can see here is that from around between, let's say, 3:45 US time and 3:30 US time, you could have taken an entry here into calls. At the bottom of this wick here, this wick, or even down here, that would have been great. But again, our Fibonacci tool tells us that as long as it stays within this 78.6 zone, it's still safe to go up. And we can see it hasn't even come down below this. And then we've gone and pushed up back to the previous high of day, had a little pullback again, and then as soon as we've broken our key level of 429.12, we've seen a push up further by another further 3 points. So had you taken your entry down here on this green candle, which opened at 427.36, you could have rode this all the way up to high of day, which was 432.88. That right there is a massive move. You know, it's 427, 435, 5.5 points. 5.5 points on one contract, that's £550. 10 contracts, 5.5k. So that just shows you the power of the retracement tool, but we have to be able to identify 2 pivot points and ensure you draw it from where the trend has started and where that high is. Then it might show you that zone where it's safe to take a call up in that direction, and then you can just ride it until however long you please or however risk averse you are. So 5.5 points one day.